The S&P saw a continuation candle lower this morning after yesterday afternoon's late day sell-off before the market attempted to recover, coming back to essentially the close of yesterday. We ultimately were up 0.06%, closing at 6309.62. We saw a large amount of negative gamma exposure rolling off today at the 6310 strike. Most of that was 0 DTE gamma exposure, and so we'll see how the data resets tomorrow at the open. But for now, as we look at the price action over the last couple of trading sessions, especially with Friday being the monthly OPEX for July, it'll be interesting to see if this is a short-term top followed by more downside, or if the gamma exposure that we see building at some of these higher strikes, in particular the 6400 strike and the 6500 strike, both have large net positive gamma exposure and look like potential targets where market participants are positioning later into the year. Zooming out to our daily candlestick chart, one thing we've been noting is the amount of space between the current price and the 50-day EMA. This is over 250 points above the 50-day EMA, which is currently sitting at 60.64. So that can only continue for so long. One of two things either will have to happen. Either we see a continued consolidation around these levels as the 50-period moving average catches up to the current price, or we see a more significant retracement in the short term as price retraces and pulls back into this 50-day moving average. This would also represent prior resistance, which is now likely turned to support at these levels. And so that's another area where if we did see a pullback, we could see some support between 6,000 and 6,100.
Thanks, Anthony. Let's take a look at the NASDAQ QQQ, which despite the overlap in holdings between the NASDAQ and the S&P, we saw the NASDAQ take a sharp drop in GEX into the negative territory, negative 273.4 million, and while S&P is still at a solid positive 1 billion. So this is interesting. It's the first time QQQ has dropped into negative territory in quite a while. You can see at least going back a month. In last night's newsletter, we were pointing out that QQQ is also at an interesting spot on the weekly chart, actually right now below the weekly whole moving average at 566.21. And this hasn't happened in quite a while. So this week's close will be interesting for QQQ as well. But let's go back to the daily chart, take a look at what happened today. We actually had the NASDAQ have a pretty nasty reversal intraday, almost reaching this top Keltner channel again, which is rising, and that is bullish. But the close today looks like it's somewhat bearish to me, below the whole moving average at 562.19, with today's close being at 561.25. Now, that's not a super definitive close below the line, but it is a red flag, especially given the weakness that we've seen with IWM recently as well. So I'm definitely watching this. You can see GEX is still largely concentrated at higher strikes, but we do want to be cautious of a quick pullback, possibly to somewhere between 520 and 550 in the coming weeks. So we'll keep watching for signs of how this develops.
Thanks, Sean. Next, let's take a look at GLD, the gold ETF, up 0.95% today, closing at 316.10. The gold market looks on the verge of potentially breaking out to new all-time highs. On GLD, we've been approaching this 315 to 317 zone multiple times over the last 3 months and have been basically forming a big consolidation pennant pattern right up into those levels. We do see gamma exposure at higher strikes. The 315 level has been a target of ours over the last several weeks, and so we reached that today. But we continue to see volume coming in at higher strikes, and we see large gamma exposure at the 325 strike and even higher. And if you've been watching our videos for any length of time, you know that one of our strategies is a weekly income strategy using GLD. This is a sub-thread actually in one of our portfolios. Today, we actually locked in $2,710 profit on our short GLD puts. We've been selling premium on shorter dated puts, hedging with longer dated long puts. And so we actually rolled both of those positions out today. We took a $4,560 loss on our long puts, but over the last several weeks, we have been collecting larger profits on our short dated puts every single week. And so even though we are taking a hit on our hedge portion of the trade, the income we're generating on a weekly basis more than covers those losses, and hence we're averaging about $1,000 a week over the last 3 months with this strategy. So looking ahead for GLD, we see the potential for a breakout in the coming weeks and months. We could see some consolidation between 315 and 320. This is our upper dealer cluster zone, and so the potential for some selling pressure resulting from the options market could be there. Although, as I pointed out earlier, the large gamma exposure growth that we're seeing at higher strikes could also potentially overcome any of the selling pressure that we're seeing here in the near term. So something to be aware of. The 50-day EMA continues to act as support, and we saw multiple tests of this support over the last month, all of which have held, and now we're starting to see a momentum breakout higher. So we think the current probabilities are looking like gold has enough momentum to push higher up into some of these higher gamma exposure concentrations.
There's not a whole lot to talk about today in terms of the VIX. We're still in this mid 16 to low 17 area. We did pressure higher earlier today with the VIX, seeing a spike up to the 17.5 level before fading. So we do want to keep an eye on that. And of course, all of that is in context of seeing the indices start to show some signs of struggling just a little bit to maintain this upward momentum. I've got IWM pulled up, and IWM has been on a little bit of an opposite trajectory as the NASDAQ the last couple of days. Yesterday, IWM had this big red candle. Today, pretty decent green candle. And today's rally in IWM brought it to just over the whole moving average. The whole's at 223.11. We see IWM at 223.27. I will note that both the NASDAQ and IWM did make lower lows and lower highs today. IWM didn't close very high above the whole moving average, though. So, if we had a solid definitive close above, I would definitely be looking for a possible run up to this big 230 GEX cluster. Our 3D graph still shows a lot of that 230 GEX to be clustered around the August 15 expiry. Some on August 1, but most of it on August 15. Since we see IWM with negative GEX still, even after increasing a little bit today toward the zero line, we're still in negative territory after that sharp drop in GEX yesterday.
Thanks, Sean. Next, let's take a look at AMD. AMD down 1.45% today, closing at 154.72. AMD has been one of the biggest movers off of these April lows, moving up over 100% over the past 2 or 3 months into this big 160 gamma exposure level. This was also a previous resistance range going back to 2024 as well. If we zoom into our chart, we can see the trading action over the last 4 trading sessions for AMD has been on the negative side. We basically peaked out last week and have been trending lower ever since. Today was actually a fairly large candle, which got bought up as AMD approached this 150 strike. And so there could be some support down here. The only thing that has me a little concerned is market momentum appears to be waning just slightly. And so if the market does have a pullback, AMD could see a move down into the lower 140s. And so what I'd like to see is if there is a pullback potentially into the 140 range, that would meet the 50-day EMA over the next few trading sessions, and that could provide a really great support area. You can see our zero gamma exposure line is also at that 140 strike, and this was also a previous resistance, now turned potential support zone just above 140 as well. So with the positive gamma exposure up ahead and some potential support in the lower 140s, I think any pullback in AMD would be a welcome event for investors and traders. And we'll be looking at adding a position in AMD if we do see any kind of further decline in the coming days into our portfolios. By the way, you can track our trades in real time by becoming a member at geeksoffinance.com. I'll put a link in the description below for you guys to check that out.
Let's take a look at Reddit, RDDT, and we actually have a subscriber who successfully was trading this a couple of weeks ago. And ever since we hit this 160 to 170 area. We've seen consolidation back toward the current price at 145.80. So I like to find these stocks that have had positive trends, but see a pullback that might be turning to resume that uptrend. And with RDDT, we can see the hole is just now starting to turn as we've seen price testing below the line, but holding above it. So I like that as a sign of possible strength. And of course, today we have volume at the 180 strikes and at 150. They do report earnings, I think somewhere around the end of the month. So we want to be cautious of the uncertainty that earnings can introduce to the picture. But strictly just looking at the GEX right now, most of the targets are higher with, good odds of reaching as high as 180 by August 15.
And for a limited time, you can get $300 off our yearly Portfolio Manager tier subscription. Use code SUMMER2025 at checkout. We've got a few spots remaining, but this promotion is ending soon, so definitely take advantage of it while you can. Members get access to our Gamma Exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies, and you'll also get access to the premium channels in our Discord community. We've got a ton of great traders in there sharing their own trade setups, and you can also track our trades in real time as we manage our options portfolio. I'll put links in the description below for all of that so you guys can check that out. Thanks so much everybody for watching. We'll see you in the next video.